What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. In this video I want to talk about Google, aka Alphabet earnings. In the last part I will talk about the stock split and what I think will happen. So make sure to watch until the end. Google beats the Q4 expectations and revenue is up 32% year over year with a total of $75 billion. In this chart we see that the year 2021 ended with a total revenue of $257 billion, a 41% year-over-year revenue. This is amazing. Google beats the EPS by $3.4, with a total EPS of $30, which is quite amazing. For the next quarter, analysts expect a $65 billion revenue and around a 24-25 EPS. If we take a look at Google's revenue, we see that it is increasing in high amounts every year. So this company isn't stagnating at all. More and more people are using Google and YouTube, meaning there are more and more people advertising on those platforms, which increases the prices on advertising itself on these platforms, which is a good thing for Google. I don't think Google will slow down in the coming years, so they do actually a really good job as a company. Google has a current PE ratio around 25, which is fine by me, to be honest. I'm willing to pay a premium price for a company which is by far the biggest market leader there is. And they are still growing in revenue year over year. Google also has a profit margin almost 30%, which is really nice, and it will only go up in the coming years in my opinion, because advertising becomes more and more expensive every year for the advertisers and the amount of automation Google implements in the advertising department is huge. Google also doesn't pay dividends, so all the free cash flow can go to research, development, acquisitions and all other stuff. Right now, Google has a free cash flow around $89 billion. This is more than enough to pay down all the debt they have, which is sitting around $28 billion. So nothing to worry about. Another great thing is that they even buy back shares, so your shares becomes more valuable every time they do so. This is also a small step to the stock split they announced to do in July. There are quite some misunderstandings about the stock split, but basically it means that the stock will be divided into 20 smaller stocks in this case. Meaning there will be no more shares issued, but the existing ones will be divided into 20 stocks in this case. Right now you pay around $3,000 a share for Google with the current pre-market prices at the time of recording this video. When it will split into 20 stocks, you will pay around $150 when it stays around $3,000 a share until July before the stock split. Stock splits can be a bit chaotic because most of the time companies are trying to make the stock price a bit more attractive to smaller investors. So it's not about the valuation, but a lot of people are not willing to pay $3,000 a share because it's $3,000. So not because about the valuation, but the amount of money. When Google splits this stock into smaller stocks, you will pay around $150, which is a whole lot more attractive for smaller investors, instead of the $3,000 you pay right now. Eventually, this will push the price up because more and more people can invest in Google. I followed the Apple and Nvidia stock split and they both got a really big increase in stock price before the actual stock split happens because investors want to make money. Right after the stock split there might be some hype because the stock is cheaper in amount of money, so not about the valuation. So people were buying those two stocks big time and the price goes up before stock split. When the stock price hits a certain area, people are going to take profits and sell the stocks, meaning the price will go down. This happened in both cases and also because of several other reasons during this period. My strategy is to wait after the stock split for the stock to come down, when people are taking the profit. When the stock price hits a certain area, for example, $150 a share, and the hype goes away, I think I will enter. But be aware that there can be a lot of money made during this stock split when you play this stock split in a correct way. But that's not my game and I think the risks are too big. But this is something you will have to decide for yourself. I think Google is one of the better companies out there. Right now I don't own any shares of Google, but with the stock split in July, I think I will add some shares to my portfolio. The fundamentals of the company are great, but the valuation is something you could argue about. I'm willing to pay the premium price because I really believe in the future growth of Google. So I will say Google is probably a buy in July after the stock split for now. But we will have to see what happens until July. Remember to always do your own research and never fully trust what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up, so make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.